Hey everybody, today we're going to talk about the pre-approval process. That's the very first step in the home buying process and probably one of the most important. So we want to make sure we get that part right. The first thing you want to do is go out and talk to several different mortgage companies, have them run your credit, look at your assets, and verify your income. We can give you several recommendations if you need them. We email out a sheet with different lenders on them if you need that. If you have a relationship with a bank already, that's okay too. So be sure that you choose the mortgage lender that you're most comfortable with. Sometimes this may or may not be the one with the absolute best rate, but this part is extremely critical, so make sure you choose wisely. When comparing rates, always use the APR to compare the rates from one lender to another lender. To be certain that you are comparing apples to apples, make sure you get all these rate quotes on the same day because mortgage rates update on a daily basis, and when the market is really volatile, sometimes it'll update twice in one day. So if you're comparing rates today and tomorrow they do this and you're trying to compare lenders, then you may or may not be getting a fair shake. So when you get a pre-approval letter done, please ask them to state on there that they have verified your credit, your assets, and your income. It has to state all three of those, and the letter won't do us much good. The pre-approval letter should also state the maximum amount that you can borrow. This will help us determine the price range of homes where we should be looking. So just because you may be able to afford a $400,000 house doesn't mean you have to buy a $400,000 house. You can go buy a $250,000 house. So, and what we'll do is have the lender adjust that letter. If we want to make an offer on a $250,000 house, we'll adjust that letter down to $250,000 to use for negotiating because we don't want them to see that you're actually capable of borrowing $400,000. So to be able to even make an offer on a house, we have to have this document in our hand. So if you go out and start looking at homes first and don't go out and get the pre-approval letter, what can happen is that you go through the pre-approval process, you found the absolute perfect home, and now you either can't get a pre-approval letter or you can't get a pre-approval letter in the amount that you'd like to have it in. And let's say we do it on a weekend and we find it on Saturday, we want to put an offer in, but we can't put it in until we get that pre-approval letter. That means we've got to wait until Monday. Come along Monday and somebody on Sunday came in and put an offer in on that home that already had a pre-approval letter. Now you've gotten bumped out of the process. You don't even get a chance to make a bid on that home, so we don't want that to happen. So, and as I stated before too, you can always get one that's higher than you're comfortable with paying, and that's okay. It's better to buy and be have money left over at the end of the month than to be house poor. So once you have your pre-approval letter in your hand, that's when we go into what we call the quiet period. At that point, you do not want to open any new accounts. I don't care how much of a discount they're going to give you to open a new account over at, pick one, Macy's, it doesn't matter. Don't do that. So you want to make sure that you keep your credit score as high as possible. That affects your rate. So anyway, there's a lot more to it than that, but that's just kind of the highlights. And if you need any more information, feel free to call us at the office, 281-340-4135. Thanks.